Hello, chart watchers and DecisionPoint faithful. Welcome to this Monday, August 16th, 2021 DecisionPoint show. My name's Erin Swenlin. I'm the Vice President of DecisionPoint.com, and I am here with my father, Carl Swenlin, who is the President of DecisionPoint.com. How's everything going for you, Dad?
Good. I guess we should mention to our viewers that your mic went out, so you're a little echoey tonight.
Yes, I don't sound so good tonight, but hopefully I'll be able to get stuff fixed up. It just decided to die just before the show, so there you go. We just work within the bounds that we have, so we are just going to press forward. So we're going to talk about the SPY and, of course, go over our indicators. Right now, we're waiting on some of those to update. So we're going to actually start from the bottom of the program and work our way back up. But we're going to go over the SPY and indicator overview. We have talk about the stealth correction. More importantly, I want to talk to you about the industry groups and a few stocks to watch within those groups. I'm seeing some interesting strength coming through. And then I will cover the diamond of the week. But as I said, I think we're just going to go ahead and start with the second part of the presentation. But before I get to that, I do want to let everybody know that we have a live trading room. I had it this morning. It is at noon Eastern, and it is free. So if you want to be a part of the live trading room, all you need to do is go to our homepage. You can sign up for our email newsletter, or there's just a box that looks very similar to this, and you just click on that and you can register directly for those trading rooms that way. All right, looking at our DecisionPoint sector scoreboard, currently the only signal that isn't a buy is on energy, and that tells us that the 20-day EMA is below the 50-day EMA on XLE. But that is occurring above that 200-day EMA. So that's why we have a neutral there and not a sell signal. But everything else is looking fairly healthy, if you will, among all the sectors, which is making sector rotation a little bit difficult to decipher these days. But let's go ahead and look at some charts. And have our indicators updated yet?
I can't tell.
Okay, I will just press forward and we will look at some of these industry groups that I am watching currently. All right, so I noticed that sector rotation has been really difficult to pinpoint. And, if we go to the sector candle glance, you can see that a lot of these sectors have kind of flat momentum going on, or we're getting sort of these touches and then moves back up, like with healthcare. It had just given us a negative PMO crossover, and then look at what we have, it's turning right back around. We have some sectors that are showing strength. Obviously, utilities has been strong. Financials pretty much took off. But as you can see, a big pullback today for the financial sector. Energy, like I said, not looking too healthy. There's that 20, 50-day negative crossover that is giving us that neutral signal on our scoreboard. Comm services, pretty much the same, really not seeing much. Now, you'll notice that discretionary has falling momentum, but I know out there that there are industry groups within discretionary right now that are doing well. I like industrials right now. You can see new momentum coming in there. Materials have been doing well. We had a little hiccup, of course, with the gold, and that kind of took a few of the materials stocks down. And technology, it is trickling up, but that looks like a rising wedge to me, and that is negative. And of course, our PMO is still heading in the wrong direction for technology. But again, we know that there are strong industry groups within. Staples is my sector to watch. I talked about this one as a sector to watch last Friday with my DecisionPoint Diamond subscribers. And I think that that sector still has some merit. What we're noticing, and that what somebody mentioned in my trading room this morning, is that we are getting a lot of rotation into, we'll look at just the last week here. We're getting a lot of rotation into these utilities, consumer staples. A lot of defensive sectors of the market are seeing a lot of action. And typically, as far as the business cycle and even the stock market cycle, when you start seeing a lot of investment in these defensive sectors, that can be a problem because it usually comes in near market tops or when the business cycle is going to start to fail. So we need to be on our toes for a possible pullback or correction, which of course we are always ready to do for you at DecisionPoint. But that is a little bit of a problem. However, if we know that industrials, staples are doing well, and there are some groups within there that are doing particularly well, I want to share those with you. So I'm going to go first and we will look at building and materials. This is an area that's really seeing a lot of growth. We've got a nice PMO buy signal here when I look at the building materials and fixtures index, and we have a strong StockCharts technical rank. Everything's looking pretty good here. And then when you compare it, this area, this industry group to the market, we are seeing rising relative strength. So that tells you that it's confirming that price is moving higher. And with the PMO rising and not particularly overbought, that's a good sign that we can see a continuation on this particular rally. And the RSI is also positive and not yet overbought. And I'm looking right here at this OHLC bar, and I can tell you right now that's going to be a bullish engulfing candle if we had candlesticks up there. Another area that's looking good is home construction. I had been watching this one a couple of weeks ago. We ended up with the pullback, but it looks like we're finally getting the breakout that I was expecting. RSI is still positive. And notice that this group, the home builders group, is relatively strong in comparison to what's going on with the S&P. So I'm liking that. And then finally, another industry group, and one I'll focus on as well, is in consumer staples. As I said, I'm liking that particular sector. And you can see the food products index broke from a declining trend here. It got a 5-20-day EMA positive crossover. The PMO gave us this buy signal in, at the bottom in oversold territory. And you can see also that the OBV is rising on this breakout. Compare this top to this top on the OBV, and you can see we have a higher top. So on this particular breakout in the short term, it's looking fairly good. But what do we want to look at as far as stocks go? Well, I have 3 of them for you. So from building materials, Masco came up on my scans last Friday. So it was in my watch list. Really like the setup on this one, nice saucer shaped bottom. And you can see the 20-50-day EMA positive crossover. We're on an oversold buy signal for the PMO. It's accelerating higher, which tells me we should see price continue higher. The RSI is positive and not overbought. And when we look at relative strength, you can see that this group is definitely waking up against the S&P. Masco is performing well against the S&P. And generally, it travels about as well as its industry group, which I'll take if the industry group is showing relative strength. So that's good for me. You can also set a really nice tight stop, in my opinion, like 5.6%. You could line that up right with that 50-day EMA. And when you look at what your upside potential is, just here on the daily chart, we're looking at about an 8%, 8.5% upside target just on the daily chart. But I would suspect when you look at a weekly chart here, the weekly chart looks really favorable. You've got a PMO, weekly PMO that is turning up in near-term oversold territory, positive RSI, and you can see that this area of support held and we're continuing higher. So I would expect a breakout from this all-time high on Masco. And then 2 more for you. I talked about home builders. Toll Brothers came through on my scan on Friday as well. I really like the setup on this one. We have a nice reverse head and shoulders breakout above that neckline. You can see the PMO is on its buy signal, and relative strength right here is just looking fantastic by the group as well as by Toll Brothers. So this one looks good. I know I had DHI on my list for diamonds a couple weeks ago. I suspect it's doing well in addition to Toll Brothers. So you could take a peek at some of your other favorite home builders and see how they stack up against Toll Brothers. And then my final diamond of the week is going to be Archer Daniels Midland. It is in the consumer staples area. It is in food products, which I just showed you is a group that I'm really liking the strength on. You can see that we have, again, sort of this nice rounded bottom on this. You've got a breakout above that 50-day EMA and a continuation of the rally. RSI is positive. PMO just hit positive territory above zero. The only thing that really bothers me, so we have really great relative strength as well. The only thing that bothers me is the fact that, you know, we're still there. These tops, we're really close to hitting those tops, but on price, we really haven't come close to hitting those, testing those tops. So it's kind of a reverse divergence going on there that I'm not particularly happy with, but I'm okay with it given the PMO is looking so strong, and I like this breakout right here above that previous top back here in June. So I think that Archer Daniels Midland looks pretty good going into the week based on that consumer staples area showing some strength as far as the sector goes. All right, that leaves you with about 18 minutes, Dad. Let's see if we've got some indicators that might be updated.
Okay. 18 minutes, huh? Woo.
I know.
Okay, let me just see here. I'll do an update on this chart. And yes, we do have our data has now updated. Some of it won't be because it doesn't update till late, but most of it is updating. You notice today we made new all-time highs, and some might be wondering, how can this be happening when we've got Afghanistan falling back to the Taliban? We've got 20 years and about $1 trillion invested in that place, and they've taken it back over within a matter of minutes, shall we say. But the market cares about what the market thinks is important. And in other words, the market is a sociopath, and it only cares about what affects it directly. And apparently the market doesn't think this affects it directly at all. Realize that's the market is a collective of all the investors, all the people involved in it. But you got to remember, you got to realize that when you're making a trade, buying or selling, you're thinking of it strictly in terms of whether you're going to make money. And, you know, of all the news surrounds you, you have a pretty good idea what is going to affect the market. And today, the Afghanistan problem did not affect anything at all. One thing is, with the new all-time highs, the total S&P volume is really well off from the 1 year daily average. And so this is not a great endorsement of what just happened. You see slightly breaking out. Notice, and the VIX did go down and hit the 20-day moving average. And that's kind of like a oversold point when it's moving up like it is.
Yeah, it seemed this morning that people were a lot more nervous, if you would say, because we had that big drop to start the day, and the VIX did really move. Its readings did get really high this morning.
Yeah, there might have been some nervousness, but let's face it, they talk about it. There was a sell-off today, quote unquote. There was no, it was minor. It was just nothing. New highs. That's interesting. Okay, 62. Okay, so that was 0 new lows. And we did an expansion of the new highs. I know, I'm not just sure about that. There's the vertical line and there's nothing.
Oh, yeah,
on
there's
that.
no
So
reading.
that hasn't updated yet. Okay, let's look at the silver cross indexes. SP 500, yeah, they've updated. And the SP 500 is moving higher. Great improvement, basically breaking this downtrend, although I don't put a great deal of stock in trend lines in a fixed a range chart. I've been thinking about it was very oversold, and it's starting to improve. And we talked about it last week, I think, or maybe the week before, but that maybe it got oversold enough and it's going to start recovering. All those lower cap stocks that have been basically not very interesting right now, not doing much of anything. They're just going to start coming back around and more money flowing into the market and picking them up, possible. But right now, I still think this is a negative configuration. And, possibly we're going to see prices moving higher and ultimately a lower top on the silver cross indexes. That's one possible outcome, not a prediction. Got this chart where I've been tracking the large cap SPY and the RSP equal weighted index, which is equal weighted S&P 500. And you can see about 7% rise since these lows here. And same places, we've got 11% plus increase. So from here to here, the equal weight did much better than the cap weighted, but now cap weight is kicking back in, and it has been kicked in for about 3 months now. Let's see if we've got volume ratios yet. Not there, not here.
No.
Disappointing. Okay.
Well, our DP Alert subscribers will know whether today was a climax day. Once all of those are up to date, I'll be writing about that.
Right, exactly. You can cover this. Yeah, so we don't have any of we don't have anything that shows us today is a climax day. And considering the low total volume, I don't think you're going to get any climaxes. Certainly, I don't think there's going to be any overwhelming evidence of climaxing right today. Okay, we're looking at our bias assessment. I'll leave you to sort this out in the DPA daily today. But essentially, you can see, we're still waiting for things to update, so there's not much point digging down too deep in that one. Okay, these haven't updated either. So I think I'm dead on the water for this.
Unfortunately, we have lots to talk about it. Yeah, you've got Apple. I know we've got the big four that we normally cover as well.
Right. Yeah, I do need to cover I wanted to cover Apple while I'm thinking of it. Last week, Jonathan Hoenig, who is the head of the capitalist pig hedge fund, I watch him on the Fox Business Channel. He's a funny guy, and I like his presentation. But he said he was short on Apple last week. That does not look like it's working out. But I thought that was a rather brave position for him to take, considering. And you can see Apple's got a nice flagpole and a pennant on it. So bullish configuration there.
Mm-hmm.
Okay, let's go back to what you reminded me I'm supposed to be doing. The dollar index, we've got a diamond formation here. A wedge, no, a diamond, yeah. And not, it doesn't look like it's necessarily going to go a lot higher. We've got a top, PMO top beneath the signal line. Gold has been doing better. Right in here, read in Tom Owen's letter, there was a big position was dumped, gold position. I think that may account for this, which I thought really looked weird at the time before I heard about the position, being dumped. So it has recovered in the last 5 days. Now we're hitting resistance on the rising trend line and resistance on the horizontal support. Resistance, and that coinciding. So maybe we're going to see another pullback. This double bottom area back in March got a very nice move off of that, and then it ditched again. Crude oil. Well, it was down earlier today, but it did get support on the horizontal support and support on the rising trend line. We've got basically a declining tops and rising bottoms, and I'd say that is a continuation pattern. Treasuries, they were up today, but basically closed that around the low. We've got a line of support and resistance here. Not so sure how much. I'm not going to share. I don't think I'm going to leave that there. Certainly anything on the chart at this point doesn't look like it's a very important line. We've got the, I'm looking for the 10-year.
There. That's not almost.
There we go. All right. This looks terrible. We had a very nice double bottom here. Good reaction to that. Broke above the line, confirmation line. Got stopped by this declining tops line here, and fell back today. Looked especially bad, but it did close above this resistance line, which I'm drawing around this support area here. So we may be done and ready to go higher, but it totally cleared out, totally aborted this double bottom. And one more, Bitcoin. Doing well within a rising trend channel, slightly a wedgie, just slightly. So we would expect move back again, if it's going to stay orderly, move back to this rising trend line and then going higher. Certainly this huge dome here, which predicted a much lower prices as it moved and basically it's formed another base here. That's really out of the picture at this point. So I'm not really concerned about that. We might run into more problems up here, but no. So that does it for me, unless you have questions.
Well, I'm going to have some questions for you. How about the gold miners chart? I've been asked about gold miners recently.
Okay, I did skip right over that. It's coming back to life. It looks like we've got, here coming off the zero line on all these indicators here that have a zero line. And bullish percent not doing well yet, and neither is the Silver Cross index.
Yeah.
It's just starting to bottom, but there's a falling wedge, which it predicts most likely it will break above that declining tops line and possibly become more bullish after that.
All right. Now I'm going to throw two symbols at you that I've been asked about recently, and that would be Google as one. I think you had that in a chart list at one point.
I do, but let me just get it on a regular format here. Google, I mean, up and away, really. I don't see anything wrong with this. This is moving sideways, but this is telling, it's way above the zero line and looks, very strong. I mean, that means the acceleration upward is just very steady, and that's as healthy as you can get. I don't see any problems there.
And Amazon.
Yeah, that's a surprise.
Uh-huh.
Yeah, that one was going to the moon and broke down, and well, it definitely recovered, closed at its high today. But yeah, I'm very surprised knowing, how strong this company is, that it has been behaving this way since this top.
Well, and really, if you look at this past year, it's just been in a giant trading range. This was one of the darling stocks. It was, everybody figured it was just going to go up forever. And it's just had a rocky year.
Solid, yeah. I think we're at the end of our tether here, aren't we?
Oh, we have one more minute.
Okay. Well, this is not a good looking formation here. This you have a consolidation and a breakout and a breakdown. So that tells me we're likely to head lower.
Yeah, I don't like that weekly PMO either. That's just
right. It's falling below the signal line, so that's on a sell signal.
Well, I'm sure everybody enjoyed your perspective on a couple of stocks, because we usually only get you for the S&P in general. So that's excellent to be able to talk to you about that.
I've always got an opinion on everything.
I know, I love it. Maybe as a teenager, I didn't appreciate it that much, but
right.
but I do now. All right, that's it for us on the DecisionPoint show. Stay tuned for us next Monday. And with that, happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.